Shutdown's over and the market dumped. Let's talk about why. So taking a look first at the NASDAQ, where we saw a pullback of about 2.3%, the S&P as well as the Dow down about 1.7% each. Now that's the biggest drop that we've seen in weeks, essentially led by a broad tech sell-off. Now we have to understand that the relief from the shutdown has been already priced in, and we've been seeing a lot of very positive numbers, especially over the last few days. Now, what traders are bracing for and preparing for is all the delayed data that will be coming our way, and you can anticipate that a lot of it will probably not be very good. Consider also the fact that the Fed is also not really in a rush to cut rates here in December. Basically, what we're going to be doing here is queuing in de-risking in crowded AI as well as mega cap names. Now let's take a look at metals, because while stocks slid, gold and silver continued to hold relatively well in the current environment. Gold live currently down just below 4,200, and silver currently down just below $53. And that's as a result of a little bit of a softer dollar, as well as continued central bank demand. Never mind the 10-year yield, which is currently sitting at about 4.09. Now, translation, what does this really mean? Well, risk is being repriced. Equities are nervous about the incoming data that we're going to be expecting. Metals are starting to hold their ground here based on a weaker US dollar, as well as some policy uncertainty. Now, positioning for tomorrow, watch the dollar and watch the 10-year yield first. If the US dollar firms and yields pop, well, you can anticipate metals are going to wobble. If they slip, gold, silver can absolutely run. Follow for the straight lead, no spin. See you at the opening bell.